Hey YouTube, welcome to Stocks in 5. In today's video, we'll be reviewing CloudMD stock in 5 minutes. Let's first start off with an introduction to the business. CloudMD is a Canadian telehealth and software company that aims to improve the accessibility and practicality of healthcare. They are led by CEO Dr. Issam Hamza, who founded a multi-clinic business in 2005, which was CloudMD's first acquisition back in 2018. Dr. Hamza's core idea with CloudMD is to build a one-stop shop for patients' healthcare needs. To better understand this idea, think of how a highway connects multiple on-ramps together. Now imagine that CloudMD's platform is the highway and that the on-ramps are different healthcare businesses. With their multiple acquisitions, they are planning on releasing their fully integrated platform later in 2021, but for now, they are still generating revenues from their individual subsidiaries and virtual clinics. Now that we know about the business, let's take a look at the industry. CloudMD is operating in the healthcare industry, which is one of the largest fields in North America and represents nearly 10% of the most developed countries' GDPs. With this in mind, Cloud is well positioned to take advantage of the growth in the telemedicine sector, as it is expected to have a compound annual growth rate of roughly 25% over the next several years. Moving on to the financials, CloudMD just posted a solid earnings report for Q1 of 2021. Thanks to their acquisitions this quarter, CloudMD brought in $8.8 million in revenue, which is a 50% increase from Q4 of 2020. They were also able to maintain their gross margins at 41%, which is expected to grow once their fully integrated platform launches. The only notable red flag in these earnings is that CloudMD's shareholder dilution in the form of stock-based compensation is relatively high, which is understandable due to the money they needed to raise for acquisitions. In the future, shareholders are definitely looking forward to no shareholder dilution, and CloudMD acknowledges this as they stated that their strong balance sheet would allow them to seek other financing options, such as debt. Finally, the company is on track to be profitable and expects to be adjusted EBITDA positive in the second half of 2021, with an annualized run rate of over $120 million, which is a big milestone for such a young company. Let's now take a look at Cloud's valuation. The stock is currently trading under $2 Canadian and is down over 40% from its all-time highs. The drop is majorly due to the telemedicine sector being overhyped during the pandemic. But if we compare CloudMD to its most obvious competitors, Well and Teladoc, we can see that the market is still undervaluing them. When looking at these companies' forward price-to-sales ratio, CloudMD is trading at the cheapest multiple. Keep in mind that CloudMD is the youngest company of the three, so an investment in DOC is inherently more risky. However, if they can execute as expected, there's lots of room for growth ahead for them. With that being said, the management team for CloudMD will play a big role in their future success, and Dr. Hamza will need to carry on with his vision strategically. Here's a short clip of Dr. Hamza explaining what separates CloudMD from other competitors.
What makes us different is we started this way long time ago. We said there's a few pillars that we need, that we have to stick by all the time. One is we have to have it from a lens of all the different stakeholders, the practitioners, because we understand it, the patients and the payers. If it doesn't make sense to all three of them, let's not do that, right? So that's number one, because then you're never gonna get anywhere in healthcare. The second thing is we have to own all our own technology. And you think, well, that's obvious. There's a lot of companies that don't do that. They're using third-party software and they don't own their software. And they're, they have partnerships and revenue sharing. They're at risk of that vendor or that partner doing something different or being acquired by a competitor. And they also don't have the same ability to change and pivot along the way with the technology. And the third thing is that we have to create that full ecosystem aspect of it so that you are protected. So it doesn't really matter. There's one thing that always goes up, and it's healthcare, right? Healthcare spending always goes up. It's recession proof. It's always there. It's always moving. But if you can take that whole ecosystem, you're protected no matter what part of the cycle you're in. But also on top of that, we're going to be able to show much better outcomes and much more efficient outcomes for everybody, including the governments and the payers. So we get the buy-in from everybody. We get the buy-in from the providers and the payers, as well as the patients. And so we built this company to be, big, multi-billion-dollar, multi-year type of company that's going to be protected in the future. And the great thing about it is that we're well-funded to execute now too, which is really a big differentiator.
As Dr. Hamza said, a notable point about CloudMD is that they own all of their software. This is important because the ecosystem that they are building doesn't just have to limit itself to their own clinics and subsidiaries. In other words, CloudMD has the possibility to white label their medical ecosystem to other businesses or governments, similar to how Shopify provides its clients with e-commerce platforms. Dr. Hamza did in fact mention that CloudMD was receiving international interest for their technologies, which could hint at future opportunities for the company. In the short term, investors are looking forward to Q3 and Q4 of 2021, where the company should be ready to grow and scale as planned. Some good signs to be on the lookout for would be a clean integration of their acquisitions, securing enterprise contracts, continued global expansion, and less shareholder dilution. That's all for this analysis on CloudMD. I hope you enjoyed the video and learned something valuable. Be sure to like and subscribe to not miss any new content.